Give it a shot here today. Don't know about that. Alrighty. We'll talk about Foxo. Yeah, I didn't trade it, but I got the notification, so I'm happy if you traded it. Yeah, it went up pretty fast. I remember it was like the day of or the day after. I just didn't have, it's fine. I didn't have a lot of liquid in my account. So I was trying to figure out what I wanted to trade, and before I could decide, I think it closed or something. And I was just like, well, we'll see. QST? Sure, we can take a look. Kind of a big couple weeks of losers for me. A lot of these big tickers haven't been doing particularly well. Not very happy with it. Google especially bothered me a lot because it's behind. I mean, it hasn't caught back up yet. There's really no reason for it to be behind. It's really bugging me. I think it's ready to go. It's getting ready to go, but all right. So this is kind of a mess already. So when I see stuff like this, I'm always concerned a bit about liquidity. So this is probably like a really low float. And then it's hard to read a chart when it looks like this, so we can do a line chart and see if that helps. But I'm not a big fan when it's like that because it's hard to read. Not QST, OST. Oh. All right. Well, we won't waste our time with that. This is an interesting chart, though. Looks like it just broke out. This looks familiar. So I think we probably did do this one before, didn't we? All right, well, I believe you. I don't remember. Yeah, so it already had like a big reaction here, and then it's just been selling off. So for now, it hasn't found a bottom yet. I'm looking at volume. I can always kind of do my best to sort of estimate where that might be. But for now, like that back test, I mean, this looks really familiar. If we didn't do this, it looks exactly like something else we did. This reminds me of another one we did. So it looks like it was a widening and then it broke upward and probably went back to where that widening began. Maybe even farther. This is a really long-term widening. That's crazy. So it went really far. Yeah, it went way beyond kind of the original top there. So that back test was successful and then it dropped. You know, not everything is perfect in the market, but sometimes there's a rhyme and rhythm to it. So just basic structure, like totally fine. I don't find it to be controversial to just do like a simple like widening and say, hey, this is probably what was going on at one point, and then go from there. So see if there's anything else we can glean from it. So yeah, that's about right. I was just guessing that I had that in the right spot, and it looks pretty close. So there was like an overreaction here on the bottom. So normally, if you get a double reversal on anything, and it doesn't matter what it is, it could be a falling wedge, it could be a rising wedge, it could be a widening, it could be a flag. It really makes no difference. If you've got, let's say you've got like, I'm going to do 3 hits on each side. And then let's say you've got like a drop and then a reversal. This kind of a pattern typically is more bullish in the long run. Now there are cases where like this could go a triple reversal or something, but usually if it does something like this, it's like really, really strong in the end, because it's like a liquidity dive and it's a fake out. And the reversal is also true. So if it were to break out and then come down. So one of the things that would strike me as important in this was that this actually broke up first and then came down. So it's like the chance of it reversing full stop are pretty low by that metric. And then I would look back and see, I'm on the hourly right now, but I'd probably look back and just see if there was any like longer standing set up here. Maybe there's a reason beyond what we're just seeing visually. So yeah, there's another one. This is probably closer to what we see on this. This is probably right. So it looks like within this channel that was being developed here, there's a widening that's kind of born out of it. So it kind of probably came to the middle. That's what it looks like. Yeah. So it came to like the center and started widening out, like from the center mark here. So that works. I mean, I think that's not like the most technical setup ever, but that's probably the simplest way to do it. So it had this slow like 1, 2, and then it's trying to like figure out, hits 3, 4, hits the bottom, reverses, and then drops. I don't know. So from that point forward, I just wouldn't know like what's a good technical play here. So we just have to kind of take that with a grain of salt. And then just take it from, like as a helicopter stance, like I don't know where the bigger target is what I'm saying. Like this is probably it. This orange line is the only thing that exists that's this low right now. And there might be a cross, which I haven't really looked for yet. But I think that is I'm pretty sure that is the cross. Like I would venture a bet that this comes back to here. Yeah, I'm pretty sure that is the cross. So it's like jumping over. Because when it landed on top of it, and we have it, again, a little bit off because we were doing it on the hourly, and now it's on the 4 hour, so it looks a little off. But it's like once it bounces off the cross down, then it ends up rocketing, going to like the moon or whatever. Yeah, so I think that was it. So I think this, if you look at the bigger picture, this is like a wave down, like a very, very large S-curve right here on that channel, and that makes sense. So the overall move, that's like the overall move right there. And so again, like this could be seen as a continuation of that move perhaps, in which case you can almost see it as like a reversal of this. So if we were to take this and extend it, which I don't usually do because it does weird stuff, yeah, like that. But if we were to extend it out, my guess is kind of beat the middle of those two. My guess is it's probably going to extend pretty well. Yeah. So these are just like continuations on those curves. So maybe, maybe that might be helpful in determining where a bottom would be on like a huge S-curve. So this is very much like an estimation, but I think that 610 level is actually right in the middle. Yeah, maybe a little bit higher than that, but probably around 610. So it would imply that like 8 cents coming into that, it could be a bottom. But there's really no reason why any stock in the market couldn't just be delisted eventually. You know, and based on where this is, it looks pretty dead. So again, like from a technical standpoint, I'm not really sure I can find a real target here that's legitimate and solid. I think that might be the best one. And then if it were just to continue to drop, you can see where that would go. So we're pretty close to a potential bottom here. And then we can look locally and see if there's anything else. Anyways, I try to go helicopter view in. Well, I'm looking. That's what I'm doing right now. So this isn't helpful, obviously, when you zoom in. It's weird how that works, isn't it? Or it doesn't work. I'm not really sure why charts do that, you know. But what you could do is just take this and draw like an SOW type line, a weakness line. So this is just showing like it hit a bottom. This was like a selling climax, and then it still went lower. This generates like a downtrend. And that's something that you should kind of keep in the back of your mind. There's another possibility for this. We've been working on these kinds of things for a while. And I've noticed that every now and then, the secondary action is actually more important. What I mean by that is this. So if you look at the, there's a kind of a double, I guess you'd call it like a W of sorts, or like on this M, if you want to call it like that. There's two supports, and this is really where it kind of takes off. And then this is really just a dip. I would say that's the projection looking forward. But this is very much just like loosey-goosey type stuff. So then what I would do is see if either of these resonate with the tops or with the middles. So this actually does have some consistency. This one it has some decent consistency right here. There's a resistance or a support and then a resistance. And it's met again on the way back down. Here and here, very similar to what we saw there. See how it's trying to like grab on? Very similar. It's almost the same motion. So you can see this motion right here with the push down right there. Very, very similar to this motion here with the push down and then there. Like it's trying to hold on to that trend. So this one seems pretty good. Let's check out the lower one and see what's going on. I wonder if the lower one was used here, and it is. So really, really interesting technical right there, because both of these are being used twice, which is bizarre. What does that mean? Heck if I know. Not yet. I don't know why it's being used like that, but it is. So for now, like it's interesting. There's two competing trends. So these are both relevant, which is, again, pretty fascinating. They're both being used in different ways. So this is kind of a weakness marker, like the secondary push down after the reactions. Then the main trend is still this yellow one. So then I would wonder if this is still happening. There's some elements of that right here. You can see another one of those formations, perhaps. I'm not sure. Perhaps, maybe right there. It could be possibly one. It's like loose. It's not really working like that. Let's just look at a trend and see. This looks more like a head and shouldered kind of approach, doesn't it? Like it's rejecting off of that and then heading down. Like more complex. So it's using that as like a resistance line. Okay, what about right below it? So what this would do is this would give us some idea of potential like buy, sell. What we probably want to do is just be as judicious as we can and like be really careful about the buy, sell zone. So I'm going to bring it in a bit and suggest that this is probably the best we're going to get right now. I don't know about this top one. I'm wondering if it's maybe at play here. Yeah, that's what I was about to say. Because on the whole, this is only going to be like one of two things, right? It's only going to be one pattern or the other. But there seems to be some consistency with both for now. So you can see what I mean. Like there could be a channel right there that's forming. There could be a channel going down that's forming. That's steeper, in which case this jumped out. But in both cases, this would be like a middle. It's very loose. I'll just keep saying that because I don't really see it as particularly strong on either side. Like it's kind of going beyond it on both sides. I'll tell you what. Here's what we'll do. I'm going to make just a channel. Why am I struggling so hard to find a channel, right? Well, normally in the market, a channel is pretty easy. You just identify tops and bottoms, straightforward enough. And then you can usually find it pretty quick. In some cases, which is the case right here, the extremity of these is fine. You can use it, and I think it does yield like a decent result. But then there's sort of a, we could say like a standard deviation, like an error kind of factor here, where we may not be getting the most accurate, unfortunately. So if this is it, then it's already broken out, right? It's already come across it, and it's actually on top of it right now. So that would be an easy way to trade it if you wanted, would be to look at it as, okay, well, yeah, there's this resistance right here. You can see it came back up, and it failed to go back over the top. So certainly that's weak. It's selling off. But it has come into a bottom that looks like it's now starting to form out a potential turnaround. So this might be really close. I'm on the 6 minute, so this isn't like a huge time frame. But you can see what I mean. Like the moving average on the RSI has actually already jumped over what would be considered like the creek, right? The resistance. So if this were to form a higher low on RSI, potentially, and I don't think it's necessary that it does that, but if it did, then it's definitely divergence because this has already hit bottoms here. It kind of looks like that pattern again, right? Of, build a support, dive through it, and it's getting steeper. But that same exact thing we just saw. So I was trying to identify, like, what's the behavior of this? Like, why is it doing what it's doing? And it seems like this might be it. And then that's the behavior on a typical bottom here. I mean, like, all of these are basically the same. So I think it's probably pretty close. This one was building out for a long time before it broke out. So there's a lot of downside. And you can see the RSI is building up. Again, this is a 6 minute. Take it with a grain of salt. But this was building up for a while. So by the time it hit this higher low and then breaks out, and it definitely broke out right here, by the time that happens, your RSI has been like building up the strength, right? You can see it, and then there's the big breakout. This is a little different because it's going down with it, and we're really just looking at the tail end. Again, it's a bit of a channel, so maybe it's a mixed bag here. Maybe we're kind of stretching it a bit to say that's already out, but it looks like it might be. So I'm seeing that as a potential like advancement, like an early advancement on that ticker right there. Now the problem here is like a rug pull, it's very difficult to know. Like on the big picture, there certainly is the sense, again, I can go to like the hourly. There's a sense at which this is kind of creating a double bottom of sorts. And it already did this once right here, and it was a hook, which is strange. So it just has this really tepid reaction, considering all things considered. I mean, this was, again, divergence right there. And you can see that build out on the RSI over time. And now it's still going down. So, there's a lot of problems with it, I suppose, is what I'm trying to say. Like, it just looks weak. There's really no easy way to estimate outside of maybe fib extensions. I know, but I'm saying like the rug pull is continuing is what I'm trying to say. It doesn't seem like it's over. So I'm having a little bit of difficulty finding a bottom. Like where would that go? It could go anywhere. It could just keep going. So we need to identify like the most likely place this sort of stops. If we're going to try to like identify. So I'm liking this one a little bit better than the other one. Now the other thing we can do is we can attempt to see if we can find what I call like the cat ear. This is another cross. So weirdly on this one, and I'm already seeing it, it did have it on the RSI and it followed through better on the RSI than it did on the other. You can see it visually. So if you look at the RSI, that was an accident. I didn't mean to do that. Oh boy. You can see the, we call it like the cat ear, right? This is the support and resistance, and you see it already hit it. That directional move might still be at play here, but it didn't even get close on the movement here, at least as far as I can tell. Maybe it did, I don't know. Well, if that was it, then yeah, it did, but it's still really late. This is like backwards. That's because I'm upside down, Booksy. Not doing it right. No, it did. Never mind. I take it back. Yeah, I don't know why I did that upside down. That was dumb. I think on the hourly, this is your best bet right here. I think really this is probably the best argument that there's going to be a change soon. And then the fact that this is widening out, it's extremely hard to see it. I think on the price action, I don't know if I would have identified it, but you can kind of see that movement widening on the RSI. And it looks like it starts way back here even, right after that big pop. So let's try that. I don't know. I always think of RSI as kind of like a cheat sheet to help me see stuff, especially on like a penny stock where the movement's not obvious. Yeah, it looks right there. So probably this little drop ledge that was used around 15 cents. Maybe even the lower part of that gap around 14.3. Right there. That's actually a better target. So that's a widening target. So there is a play here. The play is from wherever this stops to that point. Now that's a 70% move. It's a pretty decent move, assuming it breaks out, but it has to break out of sort of multiple channels, if you will. I'm not convinced that this isn't steeper, but I do think that that original trend that we were looking at, I think that is a good one to use for a potential breakout here and a support. So I think this one, man, I'm gonna have to snap it because it's not, that doesn't look right. I don't think it's going to get that low, but I think using this as kind of an overhead resistance, yeah, it's like a series of parallel jumps. See how it's creating that same kind of, roughly that same downtrend. It's the push down right there. You can see it. Right there, you can see it. So anytime it jumps over that, it tends to be pretty bullish. I don't know if we would use this bigger picture push up as like a cross down. So, it has to hit 7 cents first or something. versus something even higher, this is probably the best one to use. This is the one that got hit right there. Yeah, my guess is that that's the reason why. So this has quite a ways to go, but it's not a bad setup. I think what I would say about this is pretty straightforward. Like, I wouldn't have it going beyond that middle on purpose. I think on the big picture, if it drops down to like 8 cents or 0.085, that might be a good place to consider like a risk on entry. There's no breakout. But then the bigger picture here is certainly one of, you don't really want this until, because it could pop here and still drop down. Really don't want this until it maybe goes back above here. I think once it does that, you might see a pretty massive swing back up. And that would be like the widening that breaks out here. That's what it would probably look like, but there's no telling. Now this is the split, so maybe that's when that happens. Maybe they pump it up to 14 cents before the split just to get it up back to the top. There's a widening here up, widening down. So there is divergence on the bigger picture. You can call divergence like only on tops and bottoms, or you can just sort of look at the overall picture and say, is it generally trending up? And the answer is yeah, it is. So I don't think that's as useful personally, but that motion certainly helps the argument that it could have a pretty explosive motion. So I would suggest that this trade doesn't go beyond 15 cents before the split. I'm wondering about this level too. There's another level right here at like 13 cents. I think this is the pocket you're trying to get back to though. That's the widening breakout, but that only happens if it breaks out. This is a dangerous play before the split. I'm not measuring anything else, so I haven't tried to like time it. I'm just looking at that split. I'm saying that's possible. Waveforms are fairly regular here, so you could use them. Like that's one. And then let's see if it's pretty regular. It looks pretty regular to me. Yeah, it's kind of lengthening out each time just a bit. But that makes sense because it is widening out. So maybe by like Wednesday to Friday, yeah. It's hard to say. This is a really weird way to do it. I'm just looking at the percentages. I think it's like a plus. That's like plus 3% time-wise. Or no, time-wise it's like 31 to 40. So it's 1/3. So maybe like 15 or so bars. Yeah, so that's Friday. That sounds about right. So that's about right. I don't think tomorrow is very likely. I think if it does pop, it's a more micro like bounce and then another bottom, but we'll see. The last time it went into a widening to the upside here, and this one has no real pattern. It just kind of chops up till it breaks out. Same thing here. But this is still in a downtrend. I mean, it's not even out of its steepest trend yet. So I'm just eyeballing like a growing time ratio and just saying, well, maybe because the time seems to be expanding a little bit. It takes a little bit longer each time. That wave, the ups and downs. It's fairly regular, which is nice, but it's definitely not even. So yeah, I think if you're just trying to catch a bottom, you could kind of just ease in whenever you're feeling like it, but Yeah, I'm wondering about this. And I wouldn't be surprised if it did something like this again, where it just stays really flat from like Thursday into Friday into Monday or something, you know. Just finds another chopping point. That's why I'm like wondering. I don't really know if this is going to happen right here, but I'd say from 8 cent down to, well, it's all in the 8 cent range, but maybe 9 cent down to like 8.2. And then if you're fortunate and it works out, get this rally. So it might not be a bad place to start looking at entry. Like I said, this locally is divergent, so it could have a pop here. I just don't think you can look at this and say that it's out yet. It's not really a confirmed buy. So it's 100% speculation until it isn't, right? So I mean, there's certainly elements of probability here. You know, if this breaks and holds here and breaks again, this is, in the past, this has been the catalyst, this line. I'll make it a different color. I'll make it blue. The blue line is the catalyst line. That's the one that when it breaks out, it's likely going to go decently far. But then when you get to this 11 cent mark, especially if it gets there early, you're talking about this push up. If it gets there too early, it could just stop. You know, it doesn't have to go up high. If it gets there a little later, it might be above the other downtrend, and then I think you got a breakout on your hands. But so if it pushes soon, let's say it popped and it did go really soon, like who knows? That could just stop. I mean, either one could just stop. But this to me is a little bit more of like a hard resistance. And last time, it did a pretty decent job of following its trends, but this was really hard to track. And I don't see it being any easier here. Just don't see it being any easier. Maybe there's a similarity in angle, like 5 degrees is roughly the same every time. So yeah, this might provide that little bit of evidence that we're on the right path. I mean, if you look at where that is, that's pretty much right where that is. So it seems possible. Let's check the layers down. And it's about half. And then that's about half. So I think we're on the right path here. I really think this is a tough one, but your buy zone is probably beneath 0.085. And then as long as this stays divergent and all that jazz. I know it's only like thousands of percents away now. You might say, like, who cares? But at these levels, that it's a decent percentage. It's like a 6% more down. So that's it. I don't think there's anything else. I don't even know if I would trade it up to here. I do think that is the breakout, Bukowski-wise, but there's really no telling, you know. If it's up here and it's the day before, like let's say it's Monday and it's sitting here on the 4th and it's already at 11 cents, I think you're probably just better off not pushing your luck. I mean, you could hold some of it and ride it up, but it's a risky play because who knows, you know, this could kind of feign that it's going to go and then the split happens and it's way down here when it opens, you know, and you're done and that's it. You've lost it all. So it's a bit high risk. So yeah, I'm going to suggest that there's 2 major trend breakouts that you would watch. One is this blue line, the big blue line coming down. And I'll make another one that's kind of like slightly lesser. And that's this one. And those are both really good entries. If you can kind of wait it out, I think you'll be in a good shot at a profit. So PHH, I don't remember that one very much, but I'll add some alerts here. I might trade this if I have some capital to trade. This is not what I wanted. This is a good trade. Man, this took forever. It did not come down quick, did it? Jeez Louise. So we were thinking it'd come down here to like near 60 cent eventually. It's just where that's where the targets were. And then it's just chopped forever. Look at that, how long that took. This is pretty wild too. This is like the same thing where you have this widening that's going on RSI, but like the spread is trying to move somewhere. It's really similar. But my gosh, that took forever. Thank you. I don't know. Well, like this was a target too. I mean, we talked about coming back down to near $1, but I'm not really so sure this is gonna just pop back above $1 at this point. We'll see. So here's what's missing. It's just it's like that idea again of like it just doesn't have a bottom. It was like refusing to bottom out. And unfortunately, sometimes in these motions, when it just lacks that bottoming, then you end up with a yeah, so this is the drop in. It's yeah, sorry about sneezing near the microphone. I may start making it a rule myself that I don't want to trade anything that's below like $2, because it seems like once you get below $2, the dollar minus everything ends up being pretty inevitable. Like it very rarely seems to recover after going below 2 in the market. It's usually the bears are in charge and they're not letting it come back up. Well, so like one easy way to trade this would be to like ignore the mess and just trade tops and bottoms. It's just simple enough swing trade right now. If you're comfortable swinging it, then just do the swing trade. You got like 3 or 4 trades in here. Anytime this gets red, this has been really hit or miss though. This barely made any gains on the red side. That looks like the same angle again. Yeah. It's the same angle. The tops are better defined. That's another problem here. So when your tops are better defined, there's a lot more control. It's less random. The tops being really defined and the bottoms not being very defined is a problem, because it's clear that the bears have a better sense of control, like stopping power. Whereas bulls are kind of just randomly stopping at different intervals, it seems, bears have been pretty precise about this downtrend, like catching it. It's a lot stronger. So it's just kind of however far we take it, and then we're back up. However far we take it, back up. But, you know, that's not what we're trying to. We're not just trying to identify how difficult something is to trade. We're trying to actually find a good trade. So, yeah, I mean, I'm trying to see if there's a good time frame that this is not red already, but most of them are pretty red. So, no, my viewership just dropped to 0. That's always fun. I know, but that's a different kind of trading. And penny stock trading is extremely different. I mean, it just is. And anything below like 5 could be considered a penny stock, but you know, we get to some of these intervals, I think they're pretty difficult to time. I think timing is like not really worth it, you know. And that's where I kind of struggle with some of these. Like, I don't know how to time this. I just don't. Like, I don't see an easy path forward for timing. So I end up getting kind of stuck. So my concern right now is, like, let's say, for example, we thought it was at the bottom. There's really no reason why it couldn't just do the same thing again. And I do see a widening here, but on some time frames, it's kind of curving down, which is actually good because you want to have a more definitive bottom, like a sort of a climax for selling. We had this target down here near the 6 region. I think that's probably valid. It's been taking a long time to get down there. Again, there's sort of a magic bullet here, which is like, if you don't know, then just don't test it. It's going to be one of these things where, don't test your luck. It's going to be one of these things where probably when this happens, it will happen at the end of a day. It will be very like abrupt. And then the next day it's already going to be up like 10%. And you're just going to have to ride the momentum, because most of the time that seems to be the MO for a lot of these penny stocks. It's like, it won't do anything, it'll look crappy, and then at the end of some day, it will close like right above this line. And then when it does, the next day, it's going to like gap up, and it runs up, and then it drops like a tank, you know, right after. And that's pretty typical. I don't feel like this is very easy to catch a lot of these because of the liquidity problems. So there's always a chance, though, that this runs up again and it has a pretty decent move, but then it just backs off from that mark yet again. And we just don't know what we don't know. So I'm seeing one pattern here of potential use, which is, you know, maybe using like a 50-50, but it's not maybe going from roughly like where the drop is, like where it's losing the trend. Maybe that would help. So this one may be close to done. Like down here at 74 cents, I think we're right on the money there. And then they're coming back up to near that 50% mark. So they're doing not quite 50% in some cases, but close to 50% retracements. Like that's the triangulation right there. So there is a little bit of a pattern here to grab onto. So that would suggest that the next one goes from roughly really kind of close to where we are. This one actually didn't come all the way down through 50%, so it could even stop now. But it probably wouldn't go much further beyond 0.78. So it could go from like 75 cents to 78 cents. So you really just want to see it have a change of character, I guess, and break out. Like I said, it's probably going to be fairly abrupt, but I don't know of another way to trade this. So like right now, you might get a decent little trade out of it if you're willing to take a risk. You can get 5%. I don't think that's a very good risk on a downtrend though, so that's not my favorite. Again, potentially this is a little bit of a wedge, so maybe there's a wedge action here. It's not the strongest, it's kind of loose, but it's there. And it's divergent. So there's decent ideas here, I think. If it is a wedge, it's pretty weak. Again, because it doesn't really have, it's got like 1, 2, 3, 4 bottoms, 3 tops. So maybe, let's take a look. We're 60%. Actually, that's pretty close to where we have it. That's pretty close. So a wedge that's better tends to break out at like the 60% mark. So what I did is I just did a measure on the fib to see where that is. So the bottom here is 60 cents. It's at 0.590. It's like 59 cents. Okay. So I took that measure and then I just took like to the 618 to the top, and you can see like the bottom is pretty close to where we had that target. It's not way off. So it looks like 75 cents, 0.759. So if it's strong, it breaks out right around here or before then. And then there's a decent chance that it has a retracement back to the top. Wedges don't have to go that high, but it could. I would be a little more concerned at this point that it rejects low because of the weakness here. And I would look at this one because there's a cross down right there. Support, resistance, support, resistance. That cross down, I think, is really important. So yeah. So I'm not sure I like this play, to be honest. You can trade it if you want and try to see if you can trade it from like 70 cents back up to at least this floor at like 90 cents. But I don't know about beyond that. You know, I think there's heavier risk involved. I don't know if I would trade it like a traditional. Definitely don't think you would want to trade it like a traditional Bukowski bottom. So something like this might work. And I'm just looking at this, not even looking at retracements. It's probably some 0.5 retracements and stuff in there. So yeah, if it broke out here, that's the 0.5 right there at 87. If it hits a low of like 70 cents, that's the 618. That's still the 0.5. So these are more reasonable targets. Again, 86 to 90 seem possible. I don't think it's going to go back to $1. I don't know if I was using a different angle last time, but this seems more reasonable to me. Because this wedge would be like a wave, right? And then you'd have another wave up. But the last time it did this, and probably the time before that to some extent, you know, those movements have been pretty consistent. Roughly the same. So we look at these breakout movements, they're not drastically different. You know, we had the parallel there, and that kind of placing it over here gives you that right almost like perfectly. So that's typically like the big influx. So you're really looking at a 20% swing maybe, and then if you're lucky it goes like way higher. But I would suggest that if it does that, then you really have like another case for like, all right, it just goes again. You know, back down. Kind of does the same thing. So, can you look at Doge? Yeah, I looked at Doge recently. We'll check it out. So, Doge is back up to like, what, 22 cents or something? That's not the right one. I'll look at the one on my list. So does Doge look good? Does Doge look bad? Probably depends on who you ask. I can tell you from the get-go what it looks like to me, because I've seen this before. So when there's a middle build out here, this is like the middle of a cup of sorts, right? Now, I wouldn't go far as to say it's definitely a cup and handle or something. It's not impossible that it's a cup and handle. But what I would suggest to you is that I don't know where the volume is on here. Can't see it. The build out here on the upside to downside looks like it's doing something I'm pretty familiar with. So there's, do you see how like when this broke out right here, this is really like the main trade, right? And we had talked about it coming up high and then potentially like going way, way high, but it had to kind of come up and then maybe back up and go. And since then, it's been a while. Since then, this has had some, it's been a long while. This has had some pretty significant breakdowns. Like this widening breaking down is not a good thing in a technical sense, because remember, like the whole point of this jump on the big picture is to ultimately get back above, I'm not sure what's going on here. I think this is like a bigger picture, whatever. But the whole point of this jump would be to eventually get back above, to get above this downward creek, right? And it goes on and on and on. Like we could keep kind of zooming out, you know, going back in time, and you can see like the overall motion up. Here's the thing. If it completes, like if one completes, then you have to kind of think about like, well, what's the next one, right? So there's a problem in this one completing right now. So you see there's a widening spread going up. Does that look familiar? Yeah. It looks really similar in some ways to what we just saw here on a micro scale, where there's a push up into a top here at like 25 cents, and then it backs up, and then there's a secondary push up. I'm happy with the way this moved here. I think that there was a decent, if not very strong chance, and I'm sure some of you caught it and some of you may not have. There's a very strong chance here that it was going to go back up, because you had a, I wouldn't say it's divergent per se, but you had a stronger bottom here on the double. There was a higher low. And then when it reacts, it has a really strong reaction, right? So it generated like this really simple, like, oh, it made a higher high, then it made a higher low. So it should be able to push back up again, back to the top. However, and there's a big however, we have to start kind of taking it one step at a time, right? And saying like, well, you know, the biggest and best move, the one that we traded when we first looked at this, was from here up to like 40 cent, 10 cent to 40 cent. That did work out pretty well, right? Like that was a huge move, and we timed it out and everything. But notice that this is like this in and of itself is a widening out. That's not a good thing to lose. So we have to sort of remember that in the back of our heads, that this ultimately can't break down, because if it does, it's highly probable that this is going to come back to 6 cents. And I don't really care if you're bullish or bearish on anything in particular, right? The idea of a widening spread coming back, and I would say 6 cents is extreme, but it is there. The second one would be here at 7 cents, big whoop. The idea of it coming back down here after a widening spread is not at all controversial. Like it just is what it is. And when we look back at these creek crosses, the ones that they're making jumps, it's doing a really good job of holding those up. But you can definitely see why this particular widening would be problematic if it were to break down, right? And that's down here around 13 cents. It's really the same zone that we left. And starting to see this like pattern emerge where essentially every time this creates a bottom, it's creating like a path back to the bottom from small to big. Okay. Now here's where this is really destructive, is that long term, if it were to drop through here, it's going to lose like the macro trend. So there's a lot of big issues with this widening being lost. Like we can't just simply come back to 7 and call it a day and say, oh, it's going to bounce there. And you've lost like kind of a bigger picture trend. And we'd have to kind of reevaluate, you know, see if there's something else that we're missing. So this widening shouldn't be lost. We don't want that to be lost. Has it been lost just yet? Probably not. No, I don't think so. Again, there's different ways you kind of illustrate it. In one, it's very close. We kind of like loosely put it there. The other, it's probably not done yet. And I'm using a long-term trend here, meaning it hasn't actually dropped anything yet. I'll do that one. I tried this guy. And it looks kind of weak. Like it tried to drop it. Yeah, this is a very loose structure. So then take it to where we are now. And then check out the widening structure that was just lost. And then the unwinding that happened on this one. So it just happened a minute ago. There was this kind of wind up and then unwound, right? I think it's fairly obvious where I'm going with this. So the nature of this is a little bit hit and miss. I think you're going to see bigger retracements than you probably feel comfortable with, is what I'm trying to get at. But long term, I don't necessarily know if this is a huge problem. I'm just saying, like right now, that's definitely the target, which is 16 cents. So if this is to unwind, now we can go back to the small scale and just take a look and say, here's what we need to see, right? If this starts unwinding, yeah, I'm thinking like a head and shoulder almost. You're getting like this kind of rebound motion. Really don't want to see it cross beneath like 19 cents. This zone right here. Long term, it would have to take quite a while to get back down, but I'd say it's probably going to be more or less symmetrical. So that's an easier way to look at it. So yeah, if it came back by August 7th and it hasn't dropped below this marker, I think you're probably in better shape. So if by August 7th it's not back below about 19 cents, I think you'd be in pretty good shape. You might see it go ahead and take off again. At least back up again one more time. I think it already checked. It already back tested this. So it's kind of the same thing. I think you're looking at a secondary back test and see if you can make a higher high up to like back to that 35-cent area. Let's see where it's going. We'll see if I'm right about direction. What? No, I'm busy. I've only streamed for an hour and 10 minutes. I need to keep going. I got 40 more minutes. Take a picture of it.
I can't.
Okay. Well, I'm sorry. I spent time with you this morning, buddy. A lot of time.
Can you see if I'm gonna see what's on the first now?
Yeah, so that looks like golden pocket down there. Maybe. Yeah, I mean, it sort of just depends on which one you pick for your first bottom. It may not even drop for all we know, but because it could have like a reaction right now and like leave. But there's strength there because it is oversold. I just think it already broke down, so it's going to be a tough one. I don't know, man. It's Doge. It's been pretty consistently. If you buy from when the RSI is low and you sell when it's hot, it's been a fairly easy trade. So if you're just swinging it, I mean, that's a pretty easy trade right there. Even this is not the biggest move ever, but it's pretty consistently like buy low, sell high. You know, you don't have to necessarily time the biggest moves to make a good money on it. If you're just interested in like that. My thought here is that if it comes back up, you know, my question is, does it go above 23 cents? And if it goes above 23 cents, what happens if it gets back to the top at 24? Then it's not significantly different. But those would be the levels that I would be most concerned about. You can see the triangulation there for that side, and then you can see the triangulation here for that reaction. So those are possibilities, you know, short term. And then we'd have to wait. Because after that point, who knows? If it makes a higher high, you could have a higher low and then break back out. You could also have a kind of a last point of supply right here if it's distributing, or even like a secondary motion down after like a phase B bottom. So there's a lot of issues with kind of estimating where that goes next. Yeah. So it's hard to say. Based only on the top, and I'm not going to be able to do a very good bottoming action here, it does look like it's fairly consistent with what we were expecting, which is like a walk down by way of angle. This should be about the same as the walk up. So this is 54 degrees. And that's 54 degrees, like right in the middle. So I'm going to throw my hat out there and say that if it comes down to about 19 to 20 cents by early August and it doesn't break down, which is a good thing, I think there's a possibility it gets a pretty decent run up. My expectation would be if that happens, it's looking pretty good, like good likelihood anyways. Yeah, my expectation is that you could have a pretty decent move out and up. It takes some time, especially by August 7th or 8th. So maybe it'd be better just to say Monday. Well, it's crypto, so it just keeps trading. Maybe by August 7th or 8th. If it hasn't broken down completely, then this unwinding might be done. That's roughly the equal amount of time. Once it passes that date and if it starts going sideways and maybe breaking out of this line, I think you're in a good place to buy again. Before that time, I think it's a bit dangerous because really all that's happened here is this has just dropped the trend, uptrend. So it frankly looks just kind of bearish. It's not really any different than what happened back here when this dropped the uptrend, you know? Once it drops, yeah, there might be a reaction up. That's what I'm saying. Like it could be another reaction, but then ultimately it still comes down and makes its mark back to the where it started. So those are some deep retracement levels, right? So like in the end, could this come back to like 17 cents? Yeah. Now, why was that important? Because I was starting off by saying like that's kind of important. It shouldn't go back down that low. You really don't want it to go that low. Well, the thing is if this were to drop to like 17, you're below the bigger, larger resistance at this point. So like you've already jumped above it. That's like the whole point of what we're seeing here. If And this looks really good to me. Like this to me is a widening that should break back to the upside. It's funny how like all of this is kind of the same, right? It's the same patterns because it is. But this is a widening that breaks back to the upside. And like if you look at this one, this should have a target back to the top. So like in this particular case, we should be going back towards 40 cent pretty easily. Like that's right in the middle of the first two hits here. 1, 2, 3, 4, 5, 6, and then it broke out. So like there's a good chance that when this comes back up, that it does go all the way up to like 40 cents again, if it can manage certain moves, right? The problem is, again, if it drops back below here, you then run the risk, and it's not the biggest deal in the world, but you do, because we would have to just, again, we're not there yet. And I hate to like diminish things, like say it's a big deal and then say it's not a big deal. It's a big deal because I would be like, oh, well, that's not good, right? But if it came all the way back down, you have to now jump back over. So it's like, maybe that has some kind of a squeeze motion. It just flies off the shelf, to the moon. Maybe it has like another dip. It rejects and then it does that. I don't know. That's a bigger picture thing. This is an M cross though. So you really don't want that. You just don't want that, period. You really don't want that to lose the creek. This brings up all kinds of bigger questions, because if it drops back in after like a head fake, especially if it dips really low, and loses as in by way of we call like a hook or something, it loses that, you're gonna have some problems. So it's gonna be really ugly. And again, that leads to like the next breakdown, which is like, crap, do we really want to come back down beneath here? No, you don't. There's like a ton of important resistances right in this pocket on this bigger widening. So by losing one and going to the next and going to the next, you kind of run the risk here of some pretty extreme capitulation really fast, especially if this were to drop down and hook and then head below here. I just don't see how, I can't imagine why you wouldn't come all the way down to some pretty extreme lows, and that's definitely not what you want if you're bullish on Doge. So it's a higher risk setup with that. I think bears have something in mind, and bulls need to step in when bulls need to step in. I can't tell you that they will or they won't. It's not unlike what we've seen before, though. More than likely, you're going to get, I think you're going to get this move before anything happens anyways, personally. And here's what I would expect. So if I were just to say, like, here's my thought, I think there is something like this where you maybe have some weakness there. It's not impossible. Maybe it doesn't have weakness. It just holds. And that even looks like the moving daily right there at like 20 cents. So 20 cents is definitely a hot zone. But my guess is that this comes up, and I would not be at all surprised if this actually comes back down again. And this is really where the decision is made. January into next year, So this would not surprise me, is what I'm trying to say. Is like if you got a motion up. And here's the thing, again, on the bigger picture, is like this presents itself as a very large widening that then has a lot of possibility here. Like you can break back out and continue the widening and head all the way up to a new high, wherever that may be. I doubt it's going to be up to $2, but it could be up at like $1.50 or something like that. Sure, why not? This has happened before on Doge. But this is also the perfect time to have it break back down, because you've generated like an M cross and you've done like a second wave. And there's really, again, it's kind of like back into a corner, right? Now, if you had it break down, you could have it pretty succinctly. And I don't know exactly, again, what that looks like, but yeah. Shoot, you could even go up a second time like and have a narrowing here, because this unwinding could be delayed, like where you're kind of building up and out and over, but then it's like it still fails with a UTAD kind of setup, and we just don't know yet. So that wouldn't surprise me at all. And then having it come all the way back down to like 6 cents, 2026, mid to late year. Larger form schematic there would be a failure to advance. So that hasn't happened yet. That's purely speculative. But I'm going to suggest that it's pretty likely, based on this setup, if it holds up here around 20 cents or it has a mild break and then breaks back out, it's probably going to go back to 40, 42. I think it'll go back to the top. Because again, there's a widening back here that would be fulfilled. It did jump it, as long as it holds above there. So is this a good place to buy it? It's okay. If you didn't own anything here in Doge and you were just like looking at it, you could probably average from 22 down to maybe even as low as like 18, but you could always just kind of drop a line and wait. Like this is the main line. It's pretty straightforward. And just kind of wait it out and see what happens. That doesn't really help, but this looks bullish. Well, it almost did. I think it needs a little more time to work itself out. It's probably going to be a reaction here sooner than later. That's my guess. But I don't know if it's going to like fulfill anything other than just like popping back up to check something. Let's take a look at our darlings. So I was thinking a lot about this, and we had talked about what might happen here, and there's a few different options. One of the things was that we had talked about for AMC was like a chop period, and it's really kind of the same idea that you're like widening out and then narrowing down. Instead, we're going back down. But I was thinking about how like this doesn't really matter to me because, and I've said it before, like I don't personally really want it to go up right away. I want it to go ahead and hit that low. So I started looking at it like a head and shoulder, and again, shoulder one, shoulder head, and shoulder two. This has happened before, so I figured this is a good way to kind of look at it. This happened over here, and before you say like, well, that's not a head and shoulder because it's rising, I would just say that's ridiculous. That head and shoulders have complexity to them at times. They're not always black and white. And certainly this head and shoulder actually proves itself quite neatly previously. So if you had taken this and you looked at this as a head and shoulder with a neckline, I'm going to make it this green mark. And you had taken this up and you looked at this from that point of view, this was actually pretty straightforward. You can see that shouldering that happened right here. And what's even more interesting is if you take that, stop. If you take that and you do like a 51% drop after the neckline, over here, you find that it gives you like a target one of $3, which is end up being where the next target is. If you take the entire motion, it's like a 50-50 basically, all the way down to the bottom. So it's like a halfway point on that hook off that shoulder mark. I thought that was pretty interesting, and I was just considering like what would the implications of that be on the big picture if you took that idea, if this is iterative, which I've argued that it is. I've said it 1,000 bajillion times that it is, and that the iteration is really, without going again into crazy detail, the iteration is this motion right here, where what? Where this bottom is actually the same iteration, right? And it keeps doing this essentially like indefinitely until it comes to what we would call like a spring in a Wyckofian term, right? Or in some cases, like it might narrow like a wedge. So these motions to me are not, again, not something that I'm like sitting here saying, oh, it's definitely this, definitely that. It has to be like this, has to be like that. But it is pretty compelling and it works and the targets are very easy to get. So I like that. And I like when things are simple like that. So I looked at it the same way. And this is what I was arguing about 2020. Remember I said like this is iteration 1, this is iteration 2, iteration 3. Iteration 3 in 2020 is really small. It's just a spring motion. Well, it's really a spring into a retest. So I took the same idea here and I was like, well, what is the measurement right down to the neckline? This is where things get a little bit dicey because depending on where you draw your neckline, you might get different results. But I'm just drawing it to where this found a base, like where the selling climax is, because I think that's probably the most accurate. Even if this neckline is like technically like steeper, like you go from where it found support and right there, like that's where it could be. It could be a little bit steeper. It doesn't really matter. So what it did instead is, unless you're just talking about where does it break the neckline, right? Then it matters. But if you don't really care that much about where it breaks the neckline, then it doesn't make a huge difference. So I just did it like, okay, well, let me just do it like this. And it actually looks really neat. It worked pretty well. So I was like, all right, well, it's basically right at the neckline right now. So if this breaks down, then the measurement would approximately be, again, that this is like a 50% mark and that you have like a, not 50%, but this is like a halfway point right down, going down. And then using like a 51%, as I don't want to confuse these two things, roughly 51%. And it doesn't have to be perfect because 51% is a weird number. It's just slightly bigger than 50%. From the neckline down, and that's what I have on the chart here. I already measured it earlier, but there you go. That gives you decent probability of like where it would end up. This is what's interesting about this setup is like as it stands, where it would end up isn't particularly bad. It kind of sits right below or on top of that floor. I mean, that's super, super close to being essentially like right on 246. If you look at the one, which is again the 50-50, it's just 246, just a double bottom. If you look at the second one, which is the neckline breakdown, if it breaks here, then it's slightly below at like 243. Why is that good, Booksy? We had this long conversation yesterday before my stream cut out about how I thought, I didn't quite finish it, but how I thought that that was actually the best possible solution. So we have a nice dip here with a phase B bottom. We have a nice dip here. I think that motion going into like a spring action would be extremely bullish. I can't stress enough how bullish I think that would be. Now, what of this other breakdown? Because it didn't have this other reaction that we were looking for. Like, what happened with that, you know? Well, all I can say right now is it left open a gap, which is kind of strange. It's not like a huge gap, and I don't even mean like a gap in the traditional sense. Really, it's more like a liquid edge, right? And it was this guy right here. It's the same one that they did on the other side. So maybe gap's not the right word because I shouldn't have said that. There is like a perceived gap, but it's not really there. It's not there. There's no gap there. It filled it. But this ledge right here at 336, that area is very, very important. It was used previously. So again, like this is going to be a pretty pivotal marker. And I think if you don't already have this marked off at like 336, you probably should for most of your measurements. It may be closer to 338 now that I'm looking at it. Yeah, it's probably better. Let's just do 338. So that one's going to be really pivotal. These are halfway point markers, and they'll be used on any kind of a buyout later, like push back up later. So it's important to like remember where those are. But yeah, anywho's, this is pretty straightforward. Basically, you're looking at a really tiny zone. I can get rid of these if it's confusing. Right there. Now, why would that be great for earnings. Well, we wanted to see a high volume sell down. We didn't expect it to not go back up again, which is just what's happened. It just avoided this altogether. However, if it just avoids it and it doesn't go back up again, this is that gap zone that I'm talking about. This is what I was saying, like, it's not a gap, but it's like a ledge, right? And for whatever reason, they're just avoiding going back and retesting that ledge, which is kind of an extremity. The same thing roughly happened like right over here as well, right? And these are like parallel structures going up. This is the kind of stuff, again, at like first glance, you may not think it's that important, but then like later, this ends up being essential to the moves, like as they build out, like later on. We're getting the structure for the move later, which is a big deal. So we're finally at this place where I'm like, yeah, this is going to happen. And when it happens, this is the way it's going to move. These are the intersections that are going to be used. I'm pretty confident about it. So I'm like pretty excited right now to see that it didn't actually go back up, because I'm like, they're just avoiding doing that right now, which is fine. Like, good on them, right? You guys are like, no, it's not. Well, it is. It's fine, because at the end of the day, if you avoid that, it just means you're going to back test it later. And every time they've done that kind of stuff, I'm always thinking in the back of my head, like, that's fine. Because when bulls avoid something, I'm always like, crap, like the bears are going to capitulate and we're going to go deal with it. When bears avoid it, it's like we kind of shut our brain off because we're getting so used to it that we don't care about it. But you have to remember, like, once this thing reaches a pinnacle, if you've avoided all those back tests and you've avoided all those massive retracements, it's going to have something explosive. It's kind of like a soda bottle with a Mentos in it or something. It's going to build up pressure and explode. So I find this to be extremely comforting, because I'm like, this is great. Local targets here, if this breaks down, great. One thing I would note is that, and I'm not big on like saying everything has to be perfectly symmetrical, but when you come back through here, you can see there's like a check on the middle for going backwards, and you see this big move. Now this was literally at that tariff deadline, right? And then again, we're looking backwards. You're like, hey, look, we're right where we were back there at the end of March, going into the April, tariff time, which was like 276. Surprise, surprise. Every time we've kind of come back to these dates, July, and then now again, we're kind of coming back to that same zone. I think we're in a similar picture here. I'm curious if that makes a big impact. I don't know for sure, but I would say that, like, on the whole, does it seem possible that this has kind of a reaction up one more time? Maybe go back and check the moving average at like 320 or something. But I wouldn't be overly upset if this just continues to sell down, like really nasty like. Because remember, the whole point of this, and we had argued this before, the whole point of this would be to get that sell down. So if it's gross, it's gross. It happens. And then earnings is on 11th. It was announced. So we were talking about yesterday, it wasn't announced. It's on the 11th. And then you've got the tariff deadline on the 1st, which is Friday. So if the tariff deadline brings about some like negative reaction and earnings is positive, which I think it might be, although last August was not positive, and it actually was kind of a dud in terms of how it landed. We just stayed sideways. But I'm expecting this to be a really good thing. Look at this setup on the RSI. Like, it's exactly like what you see in 2020 on that last drop. I mean, it's so clean. I'm really excited. I think this is going to be pretty much the end of it. So it's amazing to me, because we always find that this is the same thing that happened last time, is like everybody's going to be like, this is, dead or whatever. It's not going to work out. Yeah. And then it does. And then people are like, what just happened? It's like, well, the setup has been building up, again, like this bottle rocket, like pressure. So Yeah, even if we got a reaction here, I'm looking at this coming back down. It looks to me like, again, iterative motion. So I'd be interested to see if this has a bigger breakdown, maybe after or at earnings. I'm not so sure yet if I should change any of this stuff. I feel like it's just kind of messy. I know where like I want to go with it, but there's one target here that's pretty high. And then the next one is right here. These are my two main targets. This makes sense because of the widening breakdown. If this breaks, I suppose this could be seen as like a widening as well. Nah. I would just look at that as like a cat ear break. That would be a break though of that trend. So that works too. I don't know how I can see anything on this chart anymore. Yeah, I just need to clean it up a bit. That's fine. Anyways, so I would be very, very stoked to see this kind of dip into a deeper sell-off. Now, does it have to go down there? No. Technically, I guess if this never broke the neckline, a head and shoulder doesn't have to finish. You know, that could be, again, you look at that like a mirror and say, well, I'm just going to mirror out and rise up. It really doesn't matter. Like I said, I don't particularly care. If this comes up and it generates a second top here, then it's no different than what we had just talked about a minute ago. You know, we did this on, I don't know, like a week ago. We were talking about chopping right in this corner pocket. It's just the difference between like a larger scale last point of support and a larger scale spring. And then locally, whether this has a bottom and then springs versus not springs doesn't really make a huge difference to me. So I don't personally see this as a big deal. I guess what I'm trying to say, like, I wouldn't even be surprised if it still didn't go until like over here somewhere, you know? So there's that. Like, I wouldn't be surprised if something like that happened either. Because we're still looking at this like through the window of August, roughly August 25th through the 23rd being kind of like the go time. That's a 2-year cycle, right? And I've been saying that for a long time, right? That's what I want to see. So I don't particularly, again, I don't have any particular interest in worry, I guess is what the better word is. I don't have any particular worry if this just sort of has this really slow grinding iterative motion right into a spring or something. I just don't care. So this wouldn't shock me at all. But if it does go down, then what are we going to look for? Well, I've got some different creeks and creek bodies available. There's not that much time between now and then. If you think about just trading days, it's not that much. I would suggest that there does need to be some kind of a reaction here. I think that would make the most sense. So some kind of an up-down motion, short term, would make sense. And then it's hard to say exactly what that looks like going into an earnings. I'm going to venture like a guess, and that's going to be my best guess, which is that a lot of times what we see is this kind of flattening that happens, and I don't know. This is a tough one because I feel like it's a pretty big guess, but we do see this kind of flattening happen where it's like we call it like a curtain rod drop, where it kind of flattens out and goes almost like sideways, like it doesn't want to drop, so it hovers above like 276, which is the same as like that date over here, you know, something like that, whatever it is, and then it drops through. Why? Maybe there's a miss on earnings. It's a slight miss. I don't know. Maybe it's a double beat and it still drops. This wouldn't surprise me. And the reason for that is because there's a OSTs crossing 0.085. So we were just talking about that. There's a longer term creek body right here that seems to have jumped fairly neatly. Right there. So this would be like a probable area. That's 226. Booksy. You're going to lose your mind if it hits 226, aren't you? Yeah. So what would it look like to have a spring that... I would lose my mind. You're right. I totally would. What would it look like to have a spring that does that? You probably have a reaction to 230... 239 and 246. I don't know which comes first in terms of like how it moves, because there's a bunch of different ways I guess it could do it, but you have something like this basically. So without making it overly complicated, if it hit low, you just want to see it come back up and retest 246. 239 is not really that important. You might think it's like super important. It's not that important. It's like the original selling climax, but it's not that big of a deal. This bottom right here is much more significant. That's the 246. That's the one that we really want to see if, we really want to see it react above. So this could take that much time. It may seem odd to some because you're thinking like, well, that's not really what I want to see, right? But this is exactly what you want to see, because you want to see it essentially do the exact same thing this did and the exact same thing the bigger one did, but you want to see it on a really small, steep scale over the course of like 10 to 12 trading days. So you want to see that little rising head and shoulder motion, but you want to see it as it reacts. So if that happens, you're in really good shape. So the same exact motion that we see here, again, just to repeat that, the same motion that we see here, we want to see here, but like steeper. So this has happened 1, 2, 3 times. That would be perfect. I think that would be great. It's a little confusing because I got a lot of lines on here, but my big picture analysis is very simple. Like repeated motion, going into a breakout, and it's pretty straightforward. So this motion of shouldering, and I know it goes way higher, but this motion of shouldering, and then one more motion of shouldering would be ideal. Could it happen like here instead of happening way down here? Again, yeah. It could happen off of this like 280 bottom. It's not impossible. Like it could happen right here at like 276. I'm using this as an example, but it's a complex setup. Like technically this is like a potential little reaccumulation range right here too, above this creek. So there's really no reason why you can't have like a sort of a spring or a phase B bottom and a spring in this pocket right here in this area, which again would make sense. I actually just would love to see it happen on the big picture, so I'm looking at this like bigger picture, like that's where I want to see it. Got it? Good. So again, are these set and fast, like hardcore, like moves that we have to do a certain thing? Yeah, yes and no. I mean, there has to be certain things that happen for this to break down. It's not just going to randomly break down. There has to be certain things that happen that means it's not going to break down. So you can watch those things as it goes along and make a decision. This again being like more of that LPS setup like this was, where you could have a potentially really big move off that. Versus, and there was a little, phase B bottom in there, but this is the same idea. Wherever this hits could be, again, potential for that second bottom. So if it hits here and it reacts up, then the 294 would be interesting because that'd be like the 292, the original bottom, if I'm not mistaken. Wasn't that the original low was like 292? That would be an interesting place to have it happen, to have it dip to 292 again and just have a rinse repeat kind of feeling to it. But if it does break down, I'm just suggesting like bigger picture, I don't see that as an issue. I think it's, again, iterative motion. So the rest of it from that point forward, this is what I would expect to see. And this is a mess because it's hard to like illustrate this kind of stuff. But you're basically going to see the same thing again. Guys, like, it's going to take forever? No. This one I'm saying, like, it should be fairly comparable. Like, it may not have the extremity of motion that I'm showing right here, but you can see the comparison with the bars chart if you want to use that. This is that curtain rod, and it actually happened really low, didn't it? Like, super low. So there was one here that was, like, small, and then there's, like, a bigger one right there. Kind of eases into the bottom. This is about right, though, because this would be the target, wouldn't it be? This seems about right, because there would be a decent chance that you'd have like a slow in right there for a potential drop, maybe like an earnings drop or something. It's not bad. That's not a bad, it's really not a bad bars chart. I don't know if I'd want to see it go this crazy, like high, after the fact. But going into earnings, it doesn't look too different, does it? Like this. And that would be your motion here. Let's see where the first is. The first is there. So this would work because then you would have this be Friday and then this be Monday. That's really similar to what we saw back here, where this was Friday. This was Monday. Well, not Friday, Monday, but you know what I mean. That's the same idea. That could work. Right around the same levels. And then... yeah, but the Friday one would have to be like... there. That's assuming it drops. But that's also like a, again, the head and shoulder target. And then you'd have... downside, sideways, and then earnings drop, and then a build out. Do I think the first push goes to 520? Yeah, probably. Probably goes all the way up to 6. I don't see why it wouldn't go pretty far. Like pretty fast. I think the first push you're looking at is going to hit, it's going to like melt up to like 470s region. But I couldn't tell you exactly where because my guess is that it will get hung up here, but not for very long. Like this is probably going to be one of the stopping points. It's kind of obvious based on liquidity. I'm curious if it backs up and hits 4, since that was a top, and it would probably backtest that as a bottom. So my best guess right now is it pushes up to like 470s and then drops backwards to 4 and then continues. There's other reasons for that. There's like a longer standing trend right here that you can see. It's a bit of a widening trend right there on that top. That's the same area around 4.5. So take that for what you will. This was also an angle that we calculated yesterday with the weird curvature. curvilinear kind of motion. So that one also, I think, bodes quite well and supports the idea of almost like an immediate push to probable push, anyways, I should say. Like almost an immediate probable push up. And then to like 4.5, 4.7. And then you can see like this is the rising parallel. So it's like everything kind of ends up being in the right spot. If you take the $4 mark and you go across, you see why that's like a really great place for like a preliminary supply drop. And then that ends up being roughly like a 50-50. So if you go to 226, and I'm still going to just hold on to that hope, and you do like a 50-50, this takes you to 727 or 730. That's not way off. And we talked about a couple different targets. That's 727 right there. That's a really good one. That comes back to the bottom from September. Now, is that as high as it's going to go? I don't know. You know, I couldn't tell you if it's going to be perfectly that. I think we found 3 very likely targets. One was 727. One was about $8. Like it's really right at 8. That's where that liquidity shelf is. The other, I think, makes a little bit more sense, which is to kind of push up into this trend, which really is at 9. And I think that it goes beyond the expectations. Remember, like last time, this may seem a little odd to some looking back, but this doesn't, even though like I knew it needed to go high, like almost up to 14, the move itself doesn't actually calculate that well. And if you go back and you calculate the move itself really calculates to this level here. And so that preliminary support on the way up, or the supply on the way up, is very low. It's at like 425. It makes a lot more sense like looking at where it was, because you're like, well, yeah, that's where it should be. But if you do like a 50-50 from there, it doesn't lead you to some rocket high. It just doesn't. Now, there was another variable here, which I used later in the measurement scheme. And it basically said like, hey, wherever that bottom is, you know, you can find that this does work. There was it's complicated. I don't want to go into high detail about it, but it had to do with this middle more so than anything else. So it's kind of like, if you turn this chart sideways, you know, you would be using a different spread, basically, where this is like the center mark. And wherever that bottom is, it's wrapping around the center. It could extend over the top, but it would use that center mark, which in this case was like 580. So up to about 6. So we use that. I use that as a different method of calculation. That was when we were doing like the 461 stuff. And we were looking at where some of those numbers might end up. And so that's a little different, because I think that number was 3... can't remember now. I want to say it was like 3, but I think that had to do with this one. Yeah, I think it had to do with this move. So that was like the iterative motion to 4. So what would that, how would that change anything though than looking at the bigger one? Well, it really wouldn't. All it would give us is a possible reaction here. I really don't need that. That just tells us what we already know, which is that if it goes back up here and finds support, then it's good to go. So what else could we use? Well, one thing I could tell you is that typically if this does come down to 226, gosh, guys, this is like right in the middle. It's so nice. Look at the that's the center mark right there. Golly. It's like perfect. Cuts like right through the middle of those targets. So that would be that's like the generic S-curve target. Down, up again. It's this like 1126 pocket, which I still think that's high, like higher than it needs to go. But I would say that that is a very good spot to go to. But that's what I'm saying. Like these earlier markers, they're just kind of there. They might be the right stopping point, but it also may just represent where we come back to later. Like this probably represents the top. Does that make sense? So like when we come back up later, this region that we trade in, it more accurately represents like, well, this is just where we are now. And it is a gigantic creek jump. That's the beauty of all this. You know, this curve is not just a curve for measurement's sake. It's also like a creek. I mean, this is where the resistance is, right? Now it's been lowered a bit, but you can see like if we push it here and check that box, now it's going to be up higher at like 475. Like it's essentially just moving along this direction. It's right in here now. So everything's really in the right spot, and that's where we want it to be, because we want to be above this parallel right here. So even if this were to come down a little bit lower and hit like 4, I'd be pretty happy with that. I would not at all be surprised. That's what I'm trying to say. These blue lines that I just drew out today, they may very well like stay on this chart until February, because this is very typically what we see, is that they're creating like trajectory markers, and then this is kind of your final slingshot. So my first target range is really like 850 up to 11, which is a big area. But I think that's probably what we see with like a gap or something. I don't necessarily think you're going to see that all in regular trading action. So I won't guess too much about it. I'll just be like, sure, that's where it could be, and then leave it at that for now. If it hits 780 in regular trading action and I've got tons of calls, like I'm probably not going to push my luck, and just pray that it keeps going another couple dollars. You start averaging, you start, easing out of those positions, just common sense. That's not really my job to tell you what to do, but you have to make those decisions for yourself. So this is kind of it, though. I don't know what happens after this. If we don't get some kind of a move here, I have no idea. I don't even know what I would do. If we didn't get some kind of a move at all, I'd be pretty confused by this whole setup. Like, even worst case scenario here with just some random upthrust would still provide something of a move. Or, a massive dump. That's at least a big move. Something big has to happen here, the way this is set up. And I'm not going to sit here and explain that for the rest of my life, because people always want me to explain those statements. I'm like, no, I don't really need to explain it like all the time. You don't have to trust me, but I think that that's like as much as I need to say about it. Like it's got to be something because of where we are in the whole setup. So to me, it's like, is this inevitable? That's a bit much, but I definitely think it's highly probable. So I think this is where you're going to see that build out. And after this, if people want to come back in February or whatever, March, and if this didn't happen and we didn't get this right for the last couple of years, so be it. That's when the critics can come back and say that you've been wrong for like 2 years, Booksy. And I'll say, okay, you were right. I guess I'll just retire or something, I don't know. I think this is exactly where it's going to happen, if it happens. It's going to be an interesting few months. There's Probably some more bearish outlooks here that I'm not showing off on this chart, but this is still my preferred chart. I don't see why not. But yeah, I hear you. Yeah, this is projecting up pretty neatly. GME, I gotta be honest, I'm not very happy with GME right now. So I had a S-curve on my chart. It's making me look really silly. But part of the reason is that it dropped this trend. And that happened, I believe, before the trading day ended yesterday, because it was clearly like set up in which it could have held, but it didn't hold. And it may have even happened first thing in the morning. It just never recovered. I think we got to that and it was not looking too hot. So this is, again, a little bit of a widening spread, which makes you think it's probably going to come back to like 22.5, and it did. It came back to the bottom again. On the bigger picture, there's a wave down here, and M-Cross always has these two things at play, right? And we've talked about this. It's always either an S-curve up, where it's continuation, or it's going to dump. So I think what we were really seeing here when we were looking at these dynamically is just that possibility, right? And you can see right here at this intersection, this is where it just died. It had to hold up here, and if it had held up, I wouldn't see any reason why this wouldn't have slingshotted back to the upside and didn't finish the S-curve up, finish the macro S-curve up. You say what you want about it, say it was wrong to have an S-curve like that and be bullish. The truth is that this setup had those possibilities. I don't think that's not, when I look at things like that, I don't look at it as like, oh, I didn't do it right. I think I did it right. I think it's just a matter of this didn't cross up and hold. This was the creek, and then it pushes high, and then it drops the creek. This is the same problem that we have in some ways, and in some ways that GME's been doing this quite a bit. It did it up here where it advanced higher than it needed to, right? And then it drops the creek. That's not a great sign, you know. Maybe there's some similarity there in the way this is moving, here with the drop and then here with the drop. Maybe that's an iterative motion, just like AMC. We're kind of thinking that this could boil out to like a quick 15 to 20 day period in the end, but it's still not a great thing to witness, you know. So you're looking at it as best you can, and it's like, did it finish? Well, short term maybe, long term no. And then the rest of this, unfortunately, you're left with sort of, all right, where now, right? Well, there was a gap down here, and I don't know if they're going to use it as a dangling carrot, like where it just never gets there. The $22 mark may never be used, you know, for all we know, as an actual gap fill. It may not. This by itself still looks like a double M shape. There's nothing wrong with that. It's still making a higher low on the bigger picture. So like, again, even if this went down and it filled the gap, it's still a higher low on the bigger picture. The M shape's finished, the double M. It just went really low. Traditionally, when it's bullish, this second M does not cross back down. And that's all there is to it. So when it dropped like 23.5, it's kind of like, okay, that's the nail in the coffin that you don't really want to have to deal with, but it did happen. So that's all there is to it. I can't stress how much like that stinks, but it's also not out of left field like this happens. So when I look at the big picture right now, I think that it's just doing kind of the same thing it's been doing. And specifically, I think this is option sellers really just like kind of hamming it up and raking in the dough. And that the bulls are just not ready. If they were ready, they would have stopped it and just advanced. It's that simple. Like there would have been stopping power, especially on a Monday morning open. You could have had buy-in. There's just nothing there. It's a super light volume, and then it just sell-off continues. It's just classic, like, no be there kind of stuff. I don't think it was inevitable. I don't think it had to happen is what I'm trying to say. I think that your bulls just weren't there. So what that tells me is that they're just allowing it to be taken back down for now, and I don't think that's a big deal. Locally, it hasn't really changed that much. It stinks short term. I think it makes it far less likely you're going to get some kind of squeeze motion up. But I do recall, and I do remember this, that when April happened, it's a similar motion, like a downside and then a pump. But remember, like, AMC was real sideways during this period. So it's a curiosity of mine anyways at this point. I'm wondering if we're going to see something similar where you're going to get that build out, but this build out during this time down bottom maybe is a little more mild than expected. But during this time period from like April 4th through May 27th, GME is really moving, you know, like this is a huge move. So this is April 4th through the 27th. They both have significant moves, right? But it takes AMC a really, really, really long time, doesn't it, to kind of make its way back up. It stays low for a lot longer. So I'm curious about this because I'm wondering if during this time period, if GME doesn't have what we would traditionally call like a spring motion, if it does, it'd have to be like a localized one right here. And my guess is that it'd have something to do with this drop that I took off my chart. This resistance right there. Though I don't know exactly how it plays into that. Because it's really low. It's like super low. It's too low. See, I don't know about that one because I feel like that already checked out here. Yeah, see, I don't really even know where it would go because there's nothing else there. It already lost these two. There's one more back here. This is a maybe. This is a maybe. Anyways, I was just thinking to myself, like, I wonder if this double M is done, where it lands, where it ends up. I wouldn't imagine it has to go very low. I think this could even be like a support right here that's dipped. And just, that's it. My whole point in saying that is I'm curious if, while AMC may not move very far until like the 22nd, GME may start an advancement earlier. So it would be quite interesting to see if that happens. I'm not calling it out. I'm just saying it's a curiosity of mine. So from here into roughly the 22nd, if AMC is kind of building out, it may be more sideways and low. GME really just kind of took off in advance. So it wouldn't surprise me to see that setup kind of all the same. Maybe even doing something like that. I don't know. Where would it need to be on the 22nd to have the same kind of breakout that AMC has on the 22nd if they're both going to break out at the same time? I think it has to be really high up. Like way up here. I think it has to be like all the way back to like 35. And then like Monday the 25th. Yeah, I don't know. It's a bit of a stretch here. Monday or Tuesday is kind of a wishy-washy time period. That could work. It's already like halfway up the move. Well, it would be consistent with GME like front running AMC a bit. Maybe not a huge amount, but enough that there's a pretty distinct difference. And even in these like little micro moves, the idea of AMC maybe having like a two-parter, this idea of AMC having like a build out in the middle and then going up again, GME may already just kind of be going in like one big swoop. It's possible. I don't want to overthink that too much. But yeah, so that like by the time this hits the top, AMC's only like halfway on like the 27th or something. It's like at the 29th, it's turning down. Friday the 29th. And then GME is like already up here on the 29th. And then the second move, it's hard to say. Into the 11th. September 11th, right there. Where was GME on September 11th? It's probably a pretty different situation. Right here. So what's being accomplished? I'm getting back to the same spot. Nothing. Maybe this time period that'd be high. That'd be like 66 if it goes all the way up there. That's actually the top. That's interesting. That triangulates pretty well. Let me see. One more thing. Well, there you go. I mean, that's pretty tidy. If you look at the actual triangulated top, it's like right in that pocket. I probably could make it more precise. I was trying to see why September 11th would even matter. I think that's all there is to it. If they're both kind of coming back to the same area, that doesn't make sense because then this would be down, you know? But if you think about the way that AMC travels, AMC is traveling like in a downward motion, right? And GME, it's like traveling this direction, right? And then GME is traveling on an upward motion. So technically a downward motion here into September 11th would lead you to like $2, right? A downward motion on GME, it's not really very accurate to do that. But even if you went like sideways, it'd be like 17.5. That's probably your bear case anyways, to head down into that date. September 3rd is earnings. So that's an argument for like a bear side. Is that September 11th date here is essentially like that bottom that a lot of people have been calling out. So that'd be a bearish setup. I'm not really sure what I would do with that from a helicopter perspective. I guess you could look at it like this, where it comes down and then September 11th or 8th or whatever, it dips and then rips. So it's sort of like a mirror where you've got a double top here, a double top here. So instead of doing this, it does the same thing again. Instead of breaking out there, which would be really unfortunate for my bottom line, I guess, you would basically do the same thing again. And then this time on the 11th, it would actually go, or thereabouts. So that would be like a retest or a reset of on this marker coming down. So the iteration would fail and then it would do it again. And this time it'd have to succeed or else it'd be dunsies. The good news is if you can very clearly see that this next motion, if it's just some kind of a weird mirror, that the next motion is a huge move up. Right there. From this point to this point, which is the same target we have. That's fun, isn't it? That is fun, Booksy. Why would it do that though? Somebody covering their short positions and walking it back up. It's essentially like going right back to where we started. We started here at like 12. Look at the difference in that setup and then taking it down to where we are. It's just going right back up to sort of where we started at, essentially. Might be something to that. Technically, this drops below it, so I guess you could measure from that point. I'm measuring a little high. But it'd be like, ooh, and that's that ticker right there. So maybe dropping down to like that 180 that a lot of folks like talking about. And then that leads you right back up to the top again. It's almost perfect. It's kind of freaky, isn't it? So does that really make any huge difference or dent in the greater scheme of things? I mean, it would certainly screw you over if you had really short dated stuff. You know, if you're not careful and you just started threw your money into it, I think it could definitely hurt. Does it ultimately like, this would be like an acceleration. This would have to be more extreme, and then so would this. So it'd have to be more, each dive would be more and more extreme. When is earnings for GME? Again, it's estimated on the 3rd, but who knows? Sure. So the latest that you would expect this to hit this top would be October 2nd, which is still fine. So if you got like December dated calls or something, you're probably fine. I don't think I'd go any sooner than October. That'd be a bad idea. But yeah, anything like 8 and up after October is probably going to be pretty hot, pretty nice. Because if it drops, whatever. But you're in a position where I think you've got space. This works pretty well too with this trend. I think it almost looks better in some ways. The timing on it, or the height of this, I'm not sure that matters too much. It is fascinating to me though. Look at the measurements here. This is really crazy now that I'm looking at it. Because if you think about it, like the angle here that we were just looking at, now that's a 50-50 through to 226, not lower. But it's fascinating to think about how like, what's the goal in this motion? Like what would be accomplished in this motion if it goes down there? And this just like hits the lower one. So it's right there. But what would be accomplished in this motion would be you're basically like anchoring yourself back on that September bottom, But in this case, it's downward, and on GME, it's sideways. And then the motion to the upside, what's the return? This is crazy because this is right back to melt up kind of talk where this just goes from earnings on like the 3rd all the way up. And there's like your date around the 11th. This one's more like the 26th, I suppose, when it crosses down. But isn't that crazy? And that parallel is more upward. I wonder if this downward parallel matters. Oh, that's kind of cool. It's being used right now. There's always something, right? That's the angle that we were looking at here. That's probably partially, we didn't break out. Yeah, so anyways, I think that's pretty fascinating. So like this this triangulation just leads you back to the top that you hit in May. That's all it does. And then weirdly, so does this triangulation. It just leads you back to the top from May. But what's different is that at this point you've already accumulated down low. So like at this point, now that you've hit it again, you're right back where you were, sure, but you're actually in a much better spot. This one. So this is it's different than where we were last time in May, where you didn't have any support down bottom. This one you've got support. Now it's possible, I guess, that they could just chop it back down again. It's not impossible, but this seems very likely then. Yeah, which does make me wonder about GME. If it comes up again, is it above the creek? And I think it is. What does this line really represent, you know? I get that it's the two tops, but what exactly are we looking at here? Is this some kind of like parallel structure? It doesn't seem to matter. It's not the one I would have picked. What about this one? This is interesting because if you take that parallel and you work it back to this last point of support and then resistance here, it does look like it just cuts right through the middle, and that's where we gapped up to around $25 that first day. So it is interesting, and then it does make a really clean 50-50 here in this whole move. So I do think that's kind of interesting. It's a compelling enough argument that might even be relevant. But then I'm curious if this actually puts us above, like, so let's say if we did it again, right? We came up to the same marker again. What is it doing for AMC? Well, it puts us above this really important creek that we were not above before. What is this one doing by getting us up to, you know, that level? I'm not sure. There. That's probably it. So this was the lower parallel here coming down. 1, 2, 3, 4, maybe 5. Multiple points of support coming down here. That's the trend, the bottom trend. and then it's generated on the top the same markers there, although it's messy. I'm going to all-time high and just drop the line and just see what happens, you know. That's all I did. It's not fancy. Isn't that interesting? And that's the same as these parallel tops too. So it's definitely at play, because that's the same as these double top parallels. They're like this 15-degree angle or whatever. It's the same angle. So if you were to come all the way up to the top this time, you're above all of those. Even if you came back to 24, which is really low, even if you came back to 24, you're still above. It's not impossible, but even if you came back to $24 again, you're still above that mark now. You've jumped a creek. See that? It almost doesn't matter. Like, it could sell off later and be kind of horrible for a little bit. I wonder if it's this kind of motion. Kind of like this one was. Like, we see it back way, way up to like 24. And then it comes back up again in sort of like this one did. Remember that secondary move that happens in June? We get like a secondary move that happens in January. It comes back to the top, checks it again. So like squeeze 1, 2. That'd be weird. But, and then the alternative, of course, just keeps going. Let's take this back and see where this goes. Ooh, that's the same angle. I did a pretty good job eyeballing that. I was wondering if that was what was going on. Yeah, it's like the same angle. So this is like currently trying to like dump that main trend. Like the only two major bottoms we have here, it's currently like sitting right on it. So it would be a pretty nasty flush. It just like flushed through. Yeah, I've talked about this one before because there's a this is the one that had the extension down. Yeah. Goes to this top, which is like the peak that we hit at like 60s, and then through this middle, which is where this main layup is. And it's also very close, if not the same, as this level here, which is the drop-in zone. This is where all the buy-in presumably would have happened, right down here in the markup. Has a lot of similarity there, y'all, in the way this is set up. So I guess, yeah, that makes sense. So this channel, I'll make this a different color so I can see it. This light blue one, it's dotted line. This is where the squeeze really took off. It started there and it worked its way out all the way to the top. It's this little pocket. So on a series of parallels, that's where that squeeze really happened. Wow. Oh, look at that. What do you know? So this area is so small, it seems kind of insignificant, right? Because it's like, well, it's just this tiny little region. Like, why would it going from 50 to 63 right now make such a huge difference? But look at where that 50 to 63 is on the macro in terms of like what happened during the squeeze. That's exactly where it took off on these parallels right here. It's like once it hit this zone, that's where the SOS is. Like it jumped the creek right there. Isn't that crazy? And then it builds out towards the top parallel and then it just takes off. So here's where the alternative, I guess, is at play. Yeah. I guess in theory, if this were to happen much the same, it'd have to be a pretty strong build out. This could be an SOS. And then over time, and this is a bit of a weird one. It's like, I don't know how you could possibly argue it would be something like this, basically. That. And then it would just go. That seems almost unrealistic because unless I can find like other reasons why I would do that, I don't know, it's really far. And I think that goes beyond the scope of the top. Like it would make more sense if it hits this top, so I'll try it. I guess it does, but that's also really, really, really far. Like percentage-wise, it's a different story than it is numerically. So numerically, that's huge. This might be more likely like right there. And then that lower trajectory, even though these are really steep, we're just kind of using that as an eyeball. That lower trajectory is very different. So that's like a lower slope. Because I think that plays a big role in this one. I think it has to play a big role in it. I can't see why that would just blaze right through it. So this seems possible to me to hit like 450 or something. It doesn't seem very likely to go significantly higher than that. Well, that actually adds up quite neatly too. To that bottommost one. Here, that works kind of well. I could see that. That's screwed up. I screwed up that angle. That's February 2026, so that was my estimation on the second one. Let's see where that is. That's at 400, like almost on the dot. Okay, yeah. If the top is around 120, which I think it's like 121 or something, this actually works really well because this is the 50-50. It goes right to the previous top. Right here. So this little tiny creek jump generates for us, I mean, you can say whatever you want about that, I guess, but this tiny little creek jump, if there's an SOS here, if it hits a top at like 37, then breaks out, there's a possibility this has a, it's like right in the same spot, you know? There's no telling how long some of this takes, but that setup looks really good. This would be insane. That's 1,000%. I think we have evidence for 60 again. Just like we have evidence on AMC for 12 again. I think the second move is a bit more difficult to digest. And there's a lot of question marks. Like, does this go to 40 or does it really just stop at 20? Because if this is going to go and do this massive squeeze, it is shorter though. It's a shorter move than this one. So I guess that's true. It's not, if you look at the full length of the move, it's actually a smaller move. So that would be consistent with this being a smaller move. All right, well, there's that. That could be all there is to it then. But I do wonder about, is there any other evidence this is where it's going to go around February? I'm not sure. Could be. No, that's this trajectory here. That's like a perfect trajectory right there. The rest of this is kind of sloppy. I don't really see it as very good. I don't know. I'd have to revisit that later. Well, I'm done for today. We've been going a little long. I do appreciate you guys hanging out. We didn't look at everything, but we looked at a lot of stuff. I really think we're in a good position now. This is getting really interesting, getting pretty strong. So I'm excited. Hope you guys are too. I will catch y'all on the flip side.